Okay, everybody, here we go. It is me, Gregory Mannarino. Friday, August 11th, 2023. This is my pre-market report. I was waiting for this wholesale inflation number to come out prior to doing this lovely video. Well, guess what? The number came out, and it's higher than anyone expected, except for you and me. Duh. You and I have been, look, you can't make it up. I don't care how hard you might try to make stuff like this up. It's impossible to do. It's like, it's some kind of a twisted freaking freak show, and that's exactly what it is. I mean, who doesn't understand, honestly, that inflation has nowhere to go on the wholesale level or anywhere else but higher? You got to be kidding me. And this is this is the nonsensical stuff that's being fish fed to you elbow deep, straight in the gabagool, by the mainstream propaganda ministry and every other freak they want to float out there. No surprise to a single one of you who followed this blog. Inflation is going higher. I don't care what they do. Central banks raising rates 25 basis points followed by another. It's just not going to change a damn thing. And these central banks know it. You and I have been so far ahead of the curve on this. It's incredible, but that's just the way it is. So just get used to it. So that's the big story this morning, and this is adversely affecting the bond market. The 10-year yield has risen 4.12. The relative dollar strength is about flat as I am doing this. Trading doesn't start for about 55 minutes, and the MMRI is 262. This market is definitely fighting an uphill battle, and it will do so until more action is taken. I wouldn't be surprised to see this market fall substantially. And I'm not saying a crash here. I'm saying fall substantially if risk remains where it is for a prolonged period of time. Risk based on the MMRI, or Mannarino Market Risk Indicator. It's kind of a crazy phenomenon to look at, but you and I have nailed this to the wall yet again. So we'll see what happens. I mean, direct intervention must be taken. And of course, any kind of intervention is going to be inflationary. Speaking about that, how many of you actually realize right now we are in a full-blown financial crisis? Yes, we are. We're in a full-blown financial crisis. And how do we know that's going on? Because again, look, you and I have discussed, I don't know how many years now, that debts and deficits are going to continue to balloon out of control. Without the Federal Reserve or central banks collectively becoming the lenders and buyers of last resort, which is their goal. What is the end game? What is the absolute goal of every single central bank as they work in concert to literally take over the world, to buy it all? To be the lenders and buyers of last resort. Understand, and we spoke about this, I think, last week. There's not going to be any kind of cuts moving forward with regard to spending. As a matter of fact, you know this already. Every single so-called developed nation is planning on spending much, much more because they have to. It's the nature of the beast. More cash pulled into the now. More cash pulled into the now. Ballooning global debt. As a percentage of GDP, we're already leveraged almost 400% with regard to global debt. This is going to go much higher from here. And that is massively inflationary, but you're not supposed to know that. You see, but the lies, oh yes, central banks are in the fight of their lives. They're going to raise rates and raise rates, and by some miracle, eventually inflation is going to stop. How about no, it isn't? It's not going to. You have to consider a few other things that are going on here. Tax receipts, not even close to keeping up with what must be pulled into the now just to sustain where we are. So who makes up that difference? Oh, maybe it's the central banks adding digits to a screen in any amount that they want to, sucking the purchasing power of the currency out. This is what they're doing. This is by design. You know this. Anyway, I was just writing a few things down today. So we're in a full-blown financial crisis right now because without the relentless ballooning of global debt, which is massively inflationary. It's just going to end. It's ending now. Then we have this issue with the banks, which you and I knew before anybody else here. We found out that people are pulling their cash out of these institutions, hundreds of billions of dollars. Loans are cratering. These banks are not making any deals. But what they're going to do, as you know, is they're going to consolidate. All this stuff that you and I have been talking about. So the banking sector, the financial system, who runs it all? Tell me again. Tell Greg Mannarino one more time. Who runs the economy? Who runs the financial markets? Who runs the financial system? Yes, it's the central banks. It's not some freak sitting behind the Resolute desk who doesn't know if he's alive or dead, or anybody else who they stuff there. It's not the president. This world is not run, people, by kings, queens, monarchs, or dictators. It's run by central banks. You know this. Anyway, so that's really the story. Overwhelming. This is some stuff I was just writing down this morning. Overwhelming debt. This is going to be the model moving forward, and we haven't seen anything yet. Central banks are going to buy it all. And with regard to this market, if the Fed doesn't start buying more debt here, if they don't suppress this 10-year yield, well, this market ain't going nowhere but lower. Okay, I've been telling you that if they manage to push the MMRI below 250, again, we are at 262, market ain't going nowhere, okay? Even with the propping up of crude oil, which is the lifeblood of the system, which gives energy, the whole entire energy sector a boost, which boosts the banks as well, because they're leveraged beyond their eyeballs. They're the investment banks in crude oil as well. You know all this. With regard to the consumer, they're done. Okay, we just found out, again, that these hardship loans that people are taking out against their 401ks has risen 36%. And that number is going to rise a lot more from here. Again, people are borrowing beyond their eyeballs. Credit card debt, household debt, personal debt, ballooning. It's all part of the grand plan of central banks to destroy an entire class of people, create this neo-feudal system, all the stuff you and I have been talking about for years. Well, guess what? It's here, and it's in your face. So I'm here to tell you that regardless of what you're hearing coming out of the mouths of the mainstream propaganda ministry or the thing behind the Resolute desk or Fed presidents, whoever it might be, we're in a full-blown financial crisis with a global economy which is cratering at its fastest pace in history. And as a percentage of GDP, we have never seen anything like this before. Leverage beyond belief. And that, my friends, is going to get a lot worse. And it means everyone's life is going to get a lot harder. I don't care where you sit here, whether you're really well off, super rich, or you're at the bottom rung of society, you're going to feel the pinch. You're going to feel the pinch here. Anyway, going back to this market. So on the back of this wholesale inflation number, this PPI coming in worse than expected, not for you and I, of course, okay? We got stock futures lower as the 10-year yield is rising. Dollar relative strength slightly lower, almost at the flat line. You got crude oil catching a bid. You got gold and silver relatively flat. You got cryptocurrencies relatively flat, and that's where we stand this morning. Just real quick, for those of you that are going to ask me, I did run the CUDA last night. I took it to Bradenton Motorsports Park. I could not get this car to hook. It was very, very hot. I couldn't get any traction out of the hole at all. My best run was an 1178, which is pretty damn slow for that car. It should be deep in the tens, but I could not hook. I couldn't even get the front wheels off the ground. The car wouldn't hook. It was the heat, and it didn't look like they were prepping the track too well yesterday. So a few things went on which contributed to the car not running well. It's a hell of a powerful car, but no one was hooking. I was talking to the people in the staging lanes. Everyone was having a problem hooking the cars. The track was just not good last night. The heat. Probably the prep of the track wasn't so good. Anyway, with that said, I wanted to let you all know what happened. I didn't get any good pictures or videos, or I would have put it out for all of you. Anyway, people, so I want to hear from you. Do you understand what's going on? Do you realize, and I know you do, if you're a follower of this blog, and I mean this, nobody is more ahead of the curve than you. You know exactly what's going on. You know the end game. You know what central banks are trying to pull off. But you can see it. You can actually see this more so than ever right now. And it's just so in our face, honestly. Let's see what they pull off. Are they going to manage to push the 10-year yield down? I still believe, again, I could be deluded here. I still believe central banks are not done. They're going to continue to keep rates suppressed. They're going to push the 10-year yield down, and the market will go higher. The market is struggling right now with risk where it is, with the 10-year. Look, over 4% on the 10-year yield, the market just starts having a fit. We're at 4.12. This is not a good spot for the 10-year yield, and it's being reflected clearly in the MMRI. Pay attention to the MMRI, please. Share that too with everyone. It's free. Link in the description of this video. All right. With that said, people, I'm going to let you go. I love all of you from the heart. Please do comment. Please share the video. Those thumbs up, so valuable. It lets people see the video. So the question of the day, do you realize the magnitude of the financial crisis that we are in right now? Understanding what's going on, understanding what central banks are doing, how they're fulfilling their end game here to be the lenders and buyers of last resort. This is it. We're at that moment right here and right freaking now. I will see you later, 4 or 5 p.m. Eastern time for my live stream. Please have some questions ready for me. We'll cover a whole bunch of stuff then, okay? Until then, well, have a good day.